So there's the CBDC conversation. Then you have the stable coins, which can be fully backed or not, or hybrid. And then in the last couple of years, 2-3 years, you've seen treasuries, money market funds.
Yes.
In isolation, again, remember what I said about listed stock, which a money market fund is, a treasury is. It doesn't make any sense whatsoever in isolation in terms of efficiencies, in terms of access. But when you look at all of that, let's call it cash and quasi-cash. Quasi-cash is if I sell my treasury, I can get most likely $1 for my $1. You know, I'm very simplistic here for the audience, and because we don't have time to go into details. But when I have all of that, so imagine I have mobile payments, all of the traditional ways. I have CBDCs maybe in the future. Stablecoins, treasury,
the money market funds, all that.
And that is beautiful because it's the start of our journey of what I call induced fungibility, which is now we have the same value. We have a currency, a basket of currency, or a basket of asset, or a single asset, which we can price. And we will move into a truly OTC, over-the-counter world, whereby.
But can I interrupt you,
Sure,
Alex, because I'm thinking, as you said, I have a banknote in my pocket, I have Tether, I have Biddle, just to name some. Their value, I'm not 100% convinced that it is, shall I call it stable, that there's different types of risks. What I care about is there a liquid 24/7 market to swap these? So as you said, if I'm on my phone and I have these and I'm going on a trip or wherever I am, can I choose to pay with Biddle versus Tether versus mobile money versus whatever? That's what I care about. That swap, atomic swap, if you want, between them.
Yeah, and that's where I was, actually, that's where I was going, right? So right now there are pockets of liquidity, right? Which in our world we call trapped liquidity. So I'm trapped in Biddle, I'm trapped in whatever treasury, and I'm trapped. But imagine, and by the way, it's a lot of work because it's about having the pipes connected to one another. It's having the mechanism where we can calculate value across different things at the same time, real time, whereby we can swap, we can collateralize, we can lend 24/7 between you and I. I tell you a story and why I started my journey. I started my journey in blockchain for two reasons. One, because after 16 years in banking, I thought, middle office, back office, all of that disappears. I was wrong, but now it's all about AI. That's another conversation.
And everything disappears. There's always an invisible cloak. Well, this blockchain or AI, it will fix all that mess, that's in the back office. And my dream, which is to be on Star Trek, on board, right, with Picard, right? And money is flowing fully transparently. Everything is, you can swap everything. Liquidity is everywhere, both ways, all directions. That's everything. So now it's AI, not blockchain, that will do that.
Absolutely. So, and the second reason, I had a conversation in September, I think September 2015 in Hong Kong in a coffee place. I can't remember whom I was with, but the conversation was, imagine for an hour of my time, you pay me $100 for argument's sake, but you pay me in electricity. And then I have electricity right now, exchange. And then I use that and I pledge or I swap or I barter or I buy whatever for cocoa or for stock. And that's always been my vision, where in terms of technology, the technology is there, right, for many, many years. But of course, you have the legal, the regulatory, the valuation. The more illiquid an asset is, the more complicated to spot what is the value of that asset, right? So, tokenizing real estate is very simple, technologically speaking, but what is the value of that building at the point where we need to exchange? And what is the haircut that is acceptable? Haircut meaning the discount that is acceptable. But imagine I show you my portfolio, you show me yours, and we can swap. We can say, oh, can I have that brick, which I used to call digital asset-backed securities, DABs, back in 2017, 18, right? We can do that. And to me, when we have all the stable coins, the cash, the quasi-cash, that's the premises, that's the start of that journey. Whether we achieve that, that's a different question, because you have rent seekers, you have regulators, you have a lot of competing, I would say, incentives and motivations. But for me and you, OTC, and by the way, if you are registered in, or you have a portfolio and you are KYC'd, I don't need to know you. I know your first name, Efi, I'm Alex. That's it, because we have a transaction and it's a one-off, and that's what matters, right? And we can use your knowledge and all this technology to just have that transaction. And it's why? Because you have something I want, I have something you need. Completely OTC, atomic, immutable, real time. There's a lot of work, right? But that is the value I see. What I think the problem of I've built marketplaces, right? So I think in marketplaces, my brain is like a DLT. I see connection of things that may seem irrelevant. But I think what most startups, fintech fail is to look at two things: themselves, which is, we all do as humans, but as well to focus too much on the demand, liquidity, fungibility. Liquidity and fungibility will come if it's needed, if it adds value to our transaction. But liquidity doesn't happen because you issue a token.
Correct.
Right?
Yes.
Now, liquidity, people think is because we can buy and sell 24/7, that's liquid. No, that's an outcome, which is part of liquidity. But why? Because maybe the price point is low. The bid ask, the spread is narrow. Why? Because there's demand. If there's demand, because there's value. Now, if we tokenize a piece of art, we tokenized the movie I was mentioning before in 2019. Well, that's interesting, but how fast can I resell that? If you don't know what you're buying, if you don't understand the risk, and then if you don't have the opportunity to resell, right? So there's a lot of work to be done. It's never about technology, by the way, right? It's about, do you understand what it is? And so there's a lot of education. That's why Alex, the taxi driver, cannot have access to private credit, because he doesn't understand, right?
So you're making me bring to our conversation and to the radar, to our radar and to our listeners, BlackRock's a major move in private markets, and they've done many moves. One of them being acquiring Prekin, who is really all about data, right? Private markets, which is the preparation that one would need to do, what you were talking about, to inform about these securities, right? To be able to, hopefully, maybe with the help of AI, really speed up, accelerate the way we understand private securities and private markets. And then the easier part is to get the infrastructure, a DLT, to tokenize these securities. But really the step is before, can we become familiar? And how, by the way, there's another very basic component that I think about. We have grown up many generations with the 60-40 portfolio as the model portfolio. So 40, right, is fixed income, typically. Let's forget about alternatives. And that 40 typically is what? It's funds. It's not individual bonds or fixed income, right? How do you change that mentality of not only the end users, but also all the other intermediaries have interests in between of selling funds, fixed income funds, and so on, right? And get it to the point where I have demand for individual fixed income securities because I understand them to the extent that I understand, a company stock. I understand the capital structure of a company. I think that we have to move in that direction. We're jumping on another subject. I'm a bad host, Alex.
Well, I'm a bad speaker because I go on. But so what is interesting with private credit, right? And it can be thematic. It can be I invest into, let's say, green technology. I invest into that specific company, that location, whatever. And we need to understand yield and risk as well, right? Which is different from equities. Equities, it's like I buy a house, and if I sell my house in 10 years, I'll make a lot of money. That's I'm very simplistic.
Yeah, simplistic, yeah.
Simplistic. I buy equity, Nvidia, and I'm going to make a lot of money, right? And then of course there's dividends, that's shares buyback, and all of that. But when I buy credit or debt, there's a yield, so there's a revenue generation, right? And then we need to understand if the principal is fully repaid at the end, let's say a short-term note, a commercial paper, whatever, or not. What is the risk? But what is interesting
seniority of the liabilities and all that stuff.
Yes.
Clauses,
yeah. And sorry to interrupt, but if I put my $1,000 into a bond, I'll maybe locked for 18 months, 24 months, 36, whatever, right? And so if I need to sell that, which is a lifestyle event, then there will be a massive haircut, massive discount, number one. By the way, I did a project in 2023 with a corporate venture studio, Menyala in Singapore, which is part of Temasek, and we look at private markets. And we found that lifestyle events for high net worth were about 10% of portfolio. So, I need to buy another property, I have a divorce, and whatever the lifestyle event means, I need to sell. And usually what happens is that your private banker will phone somebody and say, oh, do you want Alex portfolio or shares or whatever? And there's a massive discount. So if I invest into credit and debt, I need to understand yield, which is I don't do anything and I make money basically, right? I don't need to look at it. So the incentive, the motivation, and as well, the fact that I can't have access to my money for a time period until maturity, it's something that we have to educate. But as well, if you look at short-term notes, you could make 15, 20%, on certain product, right, per annum, which is great.
Yeah.
Do I have access with cash? No. Do you have access with money market fund? Most likely not, right? So I think there's a lot of education. The technology, it's never, I would say, the pitch. Going back to BlackRock, what is interesting is that when you have all the system for private markets, so issuance, secondary, right? And secondary, I don't see anyone doing it properly, right? So either they come from capital market and they look at book building, where they collate a lot of orders and on certain period of time, which doesn't work. I feel auction is much better ways to deal with private markets because you could create incentive gamifications. The bulletin board as well, which then there's a lot of people in Switzerland that look at it and say, we are not regulated. We post like a bit like crowdfunding, website. You can buy, put an order, we'll send an email to the owner of that stock. But anyway, when you have all that structure, what is interesting, you can start to find efficiencies. Valuation, real-time, smart contractable, right? It's programmable valuation, right? Because even if the underlying assets, let's say real estate, is not valued every day, you could add components based on interest rate, based on geopolitical factors, based on whatever, right? So you can have that. Custodians. Well, I have it on my wallet, right? I don't need a custodian. I don't need an issuing agent. So you can start to derive efficiencies, which is disintermediation.
Disintermediation, yeah.
But, and I've said that if you're a bank, an investment bank, a global sci-fi, you're an investment bank, you're a wealth manager, you're a custodian, you're all of that. So if your custody business, let's say if you're HSBC, JP Morgan, and you destroy yourself, you shoot yourself in the foot, what is the benefit and where you can gain? In your investment bank, in your wealth management, maybe, right? In your fund manager business, most likely your asset management, fund management, but your custody business may be, right, destroyed. The move with BlackRock buying Preqin, which is, hedges, a lot of private market and a lot of hedge funds, data, it's very interesting to me because from data you have insight, you can package, you can index, you can benchmark. It's unlimited, right? You can re-IPO data. You can like reinsurances, right? You can do that. And the technology, when you have DLT-based technology with that data and AI, we have to mention AI, you can distribute it.
Of course.
You can distribute it. And that's fascinating, these steps. I hope you follow me because I go everywhere sometimes.
No. And I'm thinking, different exchanges, and the best example that comes to my mind is the London Stock Exchange that has tried to create a private markets exchange, right? AIM, and has failed. And there, we could have another episode to discuss why it has failed. And obviously the solution is not technology. It's all about how you orchestrate this IP. And by the way, I am finding, and I think we can close our conversation on this note, that I'm finding a lot of similarities on the hype narrative that is floating around now with AI about efficiency gains around especially generative AI or agentic AI, and blockchain, where we are dreaming of the potential of the gains of efficiencies. But will this happen? And is there a value? Is there differentiation? Is there new value, if you want? Are we unlocking value that is locked by these efficiencies? Because, for example, I don't see that there's a lot of value created if we use AI at call centers, to help the agents there with all these summary reports and so on. I do see the efficiency, but I don't think these are differentiating factors.
That's a longer conversation. I think efficiency, we have to look at what it means, right? What it is. I think if it helps me being more faster, cheaper, more intelligent, because I'm limited, I have one neuron, right? I'm not very intelligent, then okay. I think generative AI, there's a lot of hype, especially, we need to understand the noise and the bias of the LLMs, which are built on, from humans and therefore as embedded as a level of, they have a level of noise and bias that are embedded. I think as well, the question is, once we have that efficiency, what do we do with it? Not doing more of the same and videos and we were talking about LinkedIn, right? So sometimes you see one post and then people copy and paste that post and many times over, or they put five bullet points and it's coming from AI. When I write, sometimes I spend weeks for a sentence. I know it's old, but why? It's about the learning. It's about the shedding of my bias, and I'm not efficient, but I learn a lot by not being efficient on purpose. I think it's a different conversation. But
Yeah. This is really a deep conversation about whether the goal is efficiency, what efficiency means. But you did mention the word key, which is intelligent. So what is intelligence that didn't exist before.
Mhm.
And second, it's not about doing more with less resources only. It's about doing something different that you weren't doing before, and you're able to do it now. I think there's other similarities, again, to close between blockchain and AI, the debate in blockchain that goes on about, is it going to be permissionless change or permission change? Is it going to be open source? There's similar debates going on in AI about large language models, open or not, small language models that are trained on very specific domains,
Yeah.
and are not usable in other domains. We are facing many of the same sort of
Yeah.
questions that have to do with how we're going to use this technology, how we choose to use these technologies, what are our
Mhm.
intentions? Are we just serving VC intentions
Yeah.
or customer intentions or societal issues in terms of our digital life?
If I may say, I think it's we're at a point where we have so much technology that is ready individually and as groups. And if we use this beautiful technology just to create post videos, I think it's disappointing, right? But if we use them for the greater good and, looking at hunger, disease, circular economies, farming, food, security, climate change, and all of that, that's very interesting to me. Call
Yes.
me old, but I mean,
To alleviate social inequalities, to
yes,
alleviate
yeah,
education, inequalities,
yeah,
to alleviate these big inequalities that exist at many levels, and that ironically are getting bigger as some groups are moving so much faster, and
yes,
we are creating these loops. But I remain hopeful and optimistic that
yes,
we can do this. We can do hard things. We can make it through this absolutely intense
mhm,
period of change. And the only way is really questioning, reflecting, and
yeah,
sharing that with people that continue to think and feel,
yeah,
uh, and are really committed to what I call curiosity and exploration.
yes.
And on that note, I want to thank you, Alex,
Thank you.
for this wonderful conversation.
Likewise. Thank you, Efi. Appreciate it.